Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We're going to be talking the real estate market, rental market, condo market. I got my good friend Andrew Hines back here with me. We're just going to go through, some statistics, some, what's going on out there, what we're feeling, what we expect. We're both real estate investors, so maybe what we're doing to take either advantage or to prepare for the impending disaster. Who knows? Watch the video, find out. Well, thanks for coming again, Andrew. Appreciate you having me.
Thanks for having me, yeah.
So obviously being real estate investors, the big news out there is, downtown Toronto condo market. We're going to link the video that we just did with Alex last week. You guys can go ahead and watch that and get his view. He's down in it. But, let's talk rents.
Yeah, so we've seen this coming for a little while in Toronto, and even my wife, just anecdotally, she had a condo which we just sold in downtown Toronto, and part of the catalyst for that decision is we saw firsthand the dropping in rents. We saw she had at one point got $4,000 a month for that as a furnished rental, and we were getting offers down around 3,200, 3,000, and we're like, okay, something very bad's happening here, because if that's happening to us, this is going to have a trickle-down effect. As more people are getting lower rents, they now make the decision to list their property because they can Airbnb, you don't have sporting events, all this stuff happening in Toronto that's really taken the benefit of living in Toronto away.
Yep.
And now we've finally seen it. We've been seeing it accumulating over the last few months, this huge spike in inventory.
Yes, we're seeing a lot of listings come on the market, yet we're seeing a lot of cancellations as well. To me, that tells me either people are doing one of two things. So they're listing high and hoping to get a price, and then they're canceling the listing and then relisting at a lower price.
Yeah.
Or they're listing at a price that they want to get multiples at. Maybe they get multiples, maybe they don't get the price they want, and then they cancel and relist at a higher price, right? So like in that world, in a month, I could cancel twice and list three times, right? So when they say this many listings, as a realtor, this is a game we play because people 0 days on market, it refreshes, it shows back up on people's feeds,
Well, that's part of the game, but average sale price in the month of October was down over September.
Yes, it was, yeah.
Of course.
In C1 and CO8, right? So C1 and C8, or the downtown.
Oh, the downtown, the realtor terminology.
Realtor terminology. It's basically the realtor districts downtown, and we'll post a link to that too, which you can see the boundaries of that.
Yeah, and that's so Toronto as a market as a whole is up. And year over year, it's up. If you're looking at October versus October last year, and that market is actually
let's
performing well.
We'll talk to rentals. And
okay, we'll stick with rents. So rents are down about $300 over the last three months in the downtown sector. And this is all condo apartments in Toronto. So if you think downtown, if you think that's bad overall, the worst effect is felt downtown because that's where the rents were higher to begin with. They were way higher than they needed to be. And if you just go back to the logic, there's no real reason to be downtown right now. You can't go out to dinner. You can't go to sporting events. There's nothing to do downtown, which I think it's just a natural, logical step to see those rents come down.
Well, it's so funny. So we're just looking at the stats here on rentals.ca. And so month over month, Toronto 1 bedrooms are down 2.3. Toronto 2 bedrooms are down 1.5, but then you look up at North York, month over month is up 7% and 12.4%. Now they're basically even for the year. Same, obviously Vancouver's down, Mississauga's, but these kind of are flattening at those outlying areas. And just for anecdotally, we listed a couple rentals in High Park. And back in May, we were probably getting 3,000 for these, and now we're getting about 2,600.
So yeah, you're seeing it. Yeah,
we're getting good.
We have firsthand examples all over the place of people, because there's people going who were in apartments, don't need to be. They can move back in with mom and dad. They can move to an outside city where they can work from home now, so they don't need to be there. So you see it, right? Yeah, North York, it would make more sense. It wasn't as high to begin with.
Yep.
But isn't it coincidental that all the markets that seem to be witnessing the biggest drop in rents were the highest price to begin with?
That's true. Burlington's basically either down a little bit. Hamilton is up a little bit month over month, down on the 1 bedrooms, up huge on the 2 bedrooms.
Yeah.
It's down a little bit. I mean, and that's where my portfolio is, and I'm trying to rent 2 bedrooms right now in Hamilton, and our showings are way down on that stuff, right? So
Your showings are down on your 2 bedrooms?
yeah.
So I was looking at the London market, which is where my portfolio is, and I used to be premium priced on one of my 2 bedrooms, which was just done to the nines, and I priced it most recently at $1,695. The average 2 bedroom rent in London is now over $1,600. I mean, this kind of change, I mean, that's astronomical change year to year in that market, and that makes sense. That was a lower priced market. So will this last is the question. People have left the major urban centers like Vancouver proper, Toronto proper, because they don't need to be there now. But when this all finishes and when COVID's no longer a thing, does everyone flood back there, and is there an opportunity coming here?
Well, I mean, we talked about that in the condo video, and I mean, if you can buy something that probably breaks even today, and you're not under rent control, so once this all comes back, once we have sporting events, once people are back working in the city, bars and restaurants open again, like these types of things are going to obviously affect it, right? And I think it's coming back. I mean,
so you're talking rents now or values now? Like when is it coming back is the question, and what's coming back?
2022. So I think the low point is probably mid-January, February, because obviously we're getting vaccine news out every Monday morning. We're getting vaccine news right before market open, which is nice for some of my stocks. My prediction was COVID's over by June, so hopefully, because they just shut us down again. So, well, maybe.
we'll dig into that, yeah.
Yeah. So it's more of a fact of, I think June, that's when people will start to trickle down and start to work in office centers again. We're starting to hear a bit about that anecdotally, where they're letting a couple people per floor in type thing, and they have their elevator shifts or whatever. So that's starting to happen. But I think by June, obviously vaccines are available by December, January. If they get fast-tracked through, the vulnerable people in society can start to get vaccinated, and the young, healthy people like us can roll the dice still, because at the end of the day.
Well, it'll be interesting to see how that plays out. And, if you listen to Theresa Tam, she's not pitching it as all sunshine and rainbows as soon as it's available. But, here's hoping that we will see the market resume. As far as the Toronto market goes, I don't know how far it goes down before it comes back, but I see that as being probably one of the biggest opportunities in the next year. If any market in Canada, that and Vancouver, I think they're going to witness a drop. We're already starting to witness the drop in average price in Toronto. I believe that will continue, and then we're going to have an opportunity to buy at the cheap.
Yeah, I mean, you think about that, and just when every headline you read says Toronto condos like exploding, that's probably the time to buy, because the news never gets it right. So they'll be talking about the imploding condo market 3 months after it's already starting to revert back up. So, I mean, don't try to time the bottom.
Yeah.
If you can buy something in a good building, as Alex said the last time, that has no rent control, and you can break even today, I mean, I think that's a no-brainer.
It is in a lot of ways, because what we're seeing in the market, and you have to stick to your fundamentals. That's the big thing, right? The fundamentals of that building need to work. Cash flow needs to be there. Even if it's roughly a break even, if the rents are already down, that's a little bit better hedged.
Yeah.
But our cost of construction is through the roof right now and going up. Wages are going up. We have more currency in our system than ever before because of all these incentives being given out by the government. So you add all that together, things are only going to get more expensive. So they're not going to be able to rebuild these condo buildings for the price they built them at.
That's right.
Which means those prices are going up in the long term. And I see it because I'm in the construction industry.
Yep.
I see how the new construction market gets more expensive immediately, and then I see that trickle down effect in the resale market. It's coming. So it's not about timing it perfectly, because none of us know exactly. But to know the fundamentals going into it, we can set ourselves up.
Definitely time in the market, not timing the market.
Right.
And just lastly on the rents, you can see obviously out west, Windsor, London, obviously have done very well. They're in the little yellow zone here. Out west, Alberta, Saskatchewan, they're very obviously dependent on oil prices. And with vaccine news, that means oil prices are going to go up. More people are going to be driving, more people are going to be flying, more people are going to be taking cruises. more people are going to be moving around. So therefore, oil demand will go up, and you'll see a rise in oil prices. So that's got to be good for, obviously, Alberta, Saskatchewan.
I wonder, do you see a lot of uncertainty coming just because, I mean, if it is a Biden presidency, just what his policies will be towards non-renewable energy? It'll be interesting to see how November goes.
Yes.
to see the November stats.
We'll
recap then.
We'll recap that. But
yeah.
I mean, here's the thing: like anything he does to limit that flow and limit all that type of stuff, we got to get our oil to market somewhere. That's the biggest thing I think. Yet, the more they limit it, the higher price goes.
Well, I guess the higher the price goes in the U.S., the more they limit what's able to be imported. It's the key question is of what will Alberta be able to do in order to sell that oil? Where will we be able to sell it to? Because the cost in Alberta to actually refine the oil is higher than, say, in Texas or other places where they're just pumping it directly out of the ground rather than taking it from the sand.
Yeah, that's not part of the video.
We'll leave that out.
We'll leave that out. That's if you guys want to see that, comment down below if you want to see us debate Biden and oil and all this fun stuff.
Yeah.
All right, let's start on the left coast. So, I mean, same thing going on in Vancouver, right? Like it's
almost identical to what's happening in Toronto.
Yeah.
Which
like
makes sense, right? The policies are roughly the same there. A lot of the policies are sort of dictated federally and executed provincially.
Yeah. So, I mean, there's 975 price changes. Like it's like they're reducing prices. Like it's the same thing, right? People aren't living downtown Vancouver if they don't have to. Right, they're going out to the other areas,
Just comes back to what's the benefit? Like you can't even use the pool in your condo building; it's shut down. You can't use the gym. Why would somebody want to be there? A good friend of mine, also anecdotally, like is going back to Toronto. He has his condo. He bought it for work. He now went back and lives with his parents, rented out his condo.
Yep.
Doesn't need to be there.
Well, I'm seeing that a lot. Like we don't have the younger people moving in anymore. They're all just living with their parents.
Well, and that's another rabbit hole is just the affordability issue, which I think we're going to see more of that.
Yeah, for sure. Well, let's talk Toronto, Ontario.
Well, so we were talking about condos before. The condo market is now finally witnessing a drop month over month. So we saw just over a 2% drop in average sale price in the month of October. I suspect that we're going to see that further drop, but the market itself is strong overall. And it's showing growth. I don't know the exact figure. I don't have it right in front of me here for what month over month growth was. But the annual change is 9.1% in Toronto proper. In the GTA, it's even higher than that.
Yep.
So there's a ton of activity in Oakville, Mississauga, Burlington areas. Those areas have been very
Durham's
hot.
on fire.
Durham's doing incredibly because it was one of the lower priced.
Yeah, Peterborough.
As far as getting close to Toronto and being a very affordable price, Durham is up like 20% year over year.
Yeah,
it's doing incredibly well.
And you see, so on the screen here, you'll see. So we have 6,500 new listings last 28 days, 3,000 homes sold last 28 days, 18 average days on market. Selling to list price is still 101. Mm-hmm. So we're starting to see inventory go up, and sales are really leveling off, right? Like we had a huge September. This is just detached homes in Toronto, by the way.
Oh, that's what you're looking at right there.
Yeah. So obviously Toronto home prices up 9.1% year over year. We're starting to see some monthly decline. Again, a lot in the condo market. We can come down here and see condos just in particular. So 3 months ago, 441, 455 last year. And we're at 409 average on the studios. That's obviously a pretty big hit. One bedrooms they're basically reverted back to what they were a year ago. 2 bedrooms, similar. So as we're seeing, it's not a tale across the whole thing, right? Like you're seeing basically 1 and 2 bedrooms have been even year over year. Studio apartments, which I guess were a lot more the Airbnbs and that type of thing.
Or people who are barely able to afford, and they might have been the first to say, okay, I'm out of here, go back home, try and sell them, get rid of them, liquidate them.
Yeah.
We could speculate as to why that's happening.
I guess the micro units, you hear a lot about the micro units, right? The 500 square foot or less, right? And
yeah,
so
that's what I've been hearing, is that they've been very hurt by all of this, and we can see it right here in the data.
Yeah, and then 3 bedrooms. Here's the thing about 3 bedrooms is that number could be skewed because there's just not that many 3-bedroom condos out there, right? So if one low-priced one sells and there's only a couple, then it's.
So looking at our prices then, yeah, year over year, it's roughly the same as of right now. So basically a lot of the growth that had been had has now been erased.
Yeah. And then obviously, so with all that, I mean, there's a lot of condos that are being listed. So like they're just at what, 94.86, 32.51 sold. And a lot of that pent up demand is in that condo market, right? A lot, like, I think there's 7,000 listings for condos right now. And then the rest are obviously single family.
Mm-hmm.
So.
Well, so you're saying the pent up demand is in the condo market?
Sorry.
Or in the housing market?
Housing market.
Yeah.
The buildup of inventory is in the condo market.
Yeah, the buildup of inventory. I mean, I don't have the record book here, but I've been told that it's pretty much a record number of condos being listed downtown.
Yeah.
And when demand's not there, that's just a very logical conclusion of what's going to happen there. So who knows? As we proceed through the fall, maybe the listings will shrink and it will kind of even out so that the prices don't plummet. Yep. But it's really a question of, do these homeowners, these condo owners, have the ability to wait if things aren't going well or if they're not getting the price that they want? And that's a deeper discussion. What kind of income do they have behind them? Are they mostly investors? I've definitely heard that's that be said. Now, what's their tolerance for negative cash flow? How long are they willing to wait?
Yeah. And this is just interesting here, average days on market. So the lower end of the market's actually, you've seen a 10% increase in days on market, 22 days. And same with the 500 to 750, that's mainly condos, 21 days, whereas you see the 750 to a million and a million 2.5, like they're going down, right? And then obviously 2.5 to 3.
And this is for housing, right? Not condos?
This is everything.
So this is for everything, which makes sense because those are mostly going to be housing. Once you get over the 750, like more of the condos are priced less.
Yes.
Of course, no, those numbers were growing, but yeah, once you're into the $1 million range, now these are houses, and it's just showing. Again, if people can't use their gym, they can't use their facilities, why be at your condo downtown when you can go get a house?
100%. I did want to touch on this a little bit. It's just, so again, we talked about we're back in the red here in Halton, and Hamilton is, and Toronto's been back in the red for a bit. So employment change last month was what, 80-something thousand?
The point is we're going to see a rise in unemployment.
So basically so we increased 84,000 and 65,000 of those were full-time. So we're not seeing a diminishing of full-time employees. Actually, we're seeing a lot more people going back to work at this time. What we are going to see, I think, next month is, I know like at our 3 restaurants, we laid off 90% of the staff on Friday as soon as the announcement happened, right? Like it's, we can have 2 employees there in a 4,000 square foot restaurant. And 8 patrons.
Yeah, it's a really, really strange time. But yeah, we're obviously going to see an effect here, and then probably more government intervention in terms of wage subsidies and things like that. There's going to be a massive spike in unemployment
they're still
insurance.
doing wage subsidy, right? They're doing the 75%. But I mean, if they can't be in the physical location to actually work, then I mean that really doesn't help.
No, it's not helping. And this is where it gets into a very concerning economic, dilemma, is where we're going to be as our government continues to put more money that shouldn't be there into our economy.
Well, more money that shouldn't be there, and just draconian
lockdowns.
That, I mean, I just want them to show me where it says that, where the spike in numbers are from going and eating at a restaurant.
Oh yeah.
Or again, we have a local movie theater here, film.ca. They've been operating and running since basically the lockdown, whenever they could, and they've had 0 cases there. They're going in, they're cleaning after everybody, they have social distancing, like they have a third of the people going in, but they were able to operate. They were employing people, right? Like it's sometimes like it feels like these are knee-jerk reactions without any data, right? And you listen, and obviously the health experts are saying we need to do this, this, and this. I'm like, great. But Toronto's been in that lockdown for a month.
Has it changed anything there?
And their numbers continue to go up.
Yeah. Well, and that's just it. And we could go down the rabbit hole here. I think this is a whole episode worth of discussion of does it make sense? But I think that is an important fact, is that we as Canadians need to hold our government accountable to provide the proof before they take away rights. Because this is serious. This affects you. This is affecting a lot of people who won't come back from this.
Yeah. Well, and how does it affect so this happens today, and it's not going to affect the real estate market today.
Yeah.
Is it going to affect the real estate market in 2, 3, 4, 5 months, right? That's kind of where I'm taking this whole thing, right? It's like, and that's where you guys got to look. Is like, how is this going to affect it down the road? So the people who were now working, they might have still been renting my properties, and now there's, you know what, we don't know in 12 months what's going to happen. So yeah, I'm going to go live with mom and dad.
Yeah.
So it takes renters out of the pool who would have been there to begin with, right?
Yeah, it has this effect that's just going to basically mess with a lot of people's lives and create volatility in a lot of people's lives, which creates more dependence, is going to create more bankruptcies, and we don't want to see that. I think it's very short-sighted to proceed this way without really looking into also the effects of what their measures are going to do. I mean, even the UN has said lockdowns don't work, don't do lockdowns. Yet here we are locking down more, and it's something to question for sure. As Canadians, we gotta stay on top of it.
A couple other things, like we're seeing historical growth out in the East Coast. I mean, obviously they're not locked down, but like if you want to visit there from Ontario, you got to quarantine, because our good friend Josh is out there right now quarantining.
Oh yeah.
And they have very few cases. They're open, and their real estate prices have gone through the roof. They're up 30% year over year, right?
Yeah. I think a lot of this, I've had this discussion lately with people, is what's the trajectory of Canada and Ontario? And when you look at our government's mandate to intensify the use of existing land, they're very slow to grant approvals on undeveloped areas. So with that very slow planning process we have, and then traditionally the high immigration, and we're expecting more immigration, it's just a matter of time before people start flocking to those areas, because water always goes to the lowest spot. And if Toronto is too expensive, just like we're seeing now, we're going to see a larger scale effect of that, where it's going to push people out to our eastern and western provinces more. This is why I don't count Alberta out. I certainly don't count the East Coast out. I think that they're in for massive growth, because you won't be able to rebuild those houses. You won't be able to recreate that infrastructure, the sewers, the roads, for the prices that would be feasible to do so. So people will just go out there and they'll utilize that housing that's there.
Well, it's like Bahamas, right? If you can show that you can work from home and you make $100,000 a year, you can move to Bahamas for a year.
That'd be all right.
Yeah, but if you show that you have that income and you have the ability to work remotely, and it's like, well, do I want to spend a year in Bahamas, or do I want to spend a year in Toronto? Well, if I can work remotely,
yeah. Well, I'm considering it. So my mother-in-law's got a place in Florida. They're open for business. Things are nice down there, and it's warm. I'm thinking, maybe go spend a few months this winter working remotely from there.
There you go. So, all right, at the end of the day, where do you think you're feeling? You're an investor. What are you doing right now?
So I'm basically investigating sort of non-traditional areas to invest, markets that aren't core, like Hamilton, Toronto, Burlington. I'm looking at north, like Wyerton, Owen Sound. I really liked the Welland market, but that's now it's a little too close to Toronto. Cat's out of the bag. Yeah. People have jumped on that. It's hard to get inventory. But there are other markets where the rents are still significantly higher than the prices relative to markets like London, Kitchener, etc. So I'm just looking at where is there cheap housing that you can't recreate for less than the price that it's priced at the market.
I mean, I can sell you a lot in Havelock.
I don't know where that is, but
half hour east of Peterborough.
So that might actually work. I do think that those areas will eventually come, but I mean, I want to look for centralization of infrastructure. So for instance, Owen Sound is something I'm looking at seriously right now, because it's roughly 30,000 people there. The infrastructure's there. It's a shipping lane. It's the central hub for all the markets around it. And you can still get stuff for $400,000. You can still get a fourplex for $400,000 or $500,000. That's drastically different from Hamilton, London, and certainly Toronto.
Definitely. Well, thanks so much, Andrew, for coming and sharing your wisdom. And guys, hopefully you enjoyed it. If you did, definitely smash the like button for the YouTube algorithm. The more you smash the like button, the more this gets the video out to other Canadians, so they can hear this and maybe take some action and grow their wealth. And if you guys like the channel, definitely subscribe. Tune in for all of them.
Yeah.
See you guys in the next one.
Comment below too, and let us know what you think, where you're looking, where you see opportunity. We want to know.
Yeah, and this is a monthly video, so if there's an area you want me to cover, then put it down below. And if you have any stats or anything like that, happy to go through the stats and just put my 2 cents in as well. So put that down below. Thanks, guys. Catch you in the next one.